Hi all, thank you so much for joining the webinar. There are people from West Coast and the people from East Coast. So good morning and good afternoon for everybody. This is Mani. I am the co-founder and CEO of Cloud Banking. Um, and today we are going to discuss about very interesting topic, how any financial institution can serve the Gen Z customers, right? So the Gen Z customer is always a question mark, right? So they keep thinking a lot. They do things differently, isn't it? So how we can, as a bank or a credit union, how we can actually attract these customers, right? That is the main intention begin the topic. And we have two interesting speakers in this podcast. One is Mr. Doran, and another is Prakash. Thank you so much for being here, Doran and Prakash. I really appreciate that. Hmm? And to give a quick background about Doran, Doran is VP of Key Point Credit Union, and he held leadership roles at CarMax and Wells Fargo Bank before. And he's author of two books, Invisible to Valuable. I think, Doran, I would request you to give a short introduction about you.
Well, very much for having me today. And really, what I would like to actually talk today is about our belief in young adults and why what seems to be what we think it's not really is. So kind of change a little bit the perception and how we deal with young adults so you can build better product and serve them better and really increase your acquisition or retention. And the value that they're looking for in the services that we provide. So I hope that what I share with you today will help you to do so. Um, Everything that I share is my personal opinion. It's not reflecting uh, my company position, but I work for Keypoint Credit Union, but it's my experience and my position. Mm, my background is in economics, and so I like to ask a lot of questions. I like numbers. I think a lot of people look at numbers, but I don't. Many times I don't believe the numbers that I look at. I like to really look at the story behind them. So if you like economics or Maxwell Gladwell, you understand how to look at numbers a little bit differently. And this is the way I look at life. I look really to the story behind it. A little bit about my background with young adults. I work a lot with schools, with universities. I mentor a lot of them for many years. I have two sons that are young adults. One just graduated from college, and another one is a junior in college. So I get really good insight in how they work, and I especially get it when I go with them and their friends surfing or rock climbing. Then you really get the real scoop without any sugarcoating. They tell you exactly what it is. Mm, One thing that I would not mention much, I will not say is about I will not mention Gen Z because I think what happened, a lot of them like to be called young adults and they like to be called emerging professionals. They do not like to call Gen Z because it's really boxing them into some stereotype. A lot of condescending information from headlines and the news. So I don't use Gen Z. Um, I will say that a lot of perception, and I would like to just take another minute to really set up where I'm coming from. Mm, a lot of the perception in credit unions and banks is that we are here to save Gen Z. And I was in a conference where some CEOs sat together and said that Gen Z or the young adults are don't understand financial education and they need to be saved. And flying back home, I'm thinking, oh, you're the one that need to be saved because they're the one that's saving us. We're not saving them. If they're not coming to us, we're out of business. So it's kind of flipping the narrative about who they are and what they're looking for. And this generation is a brilliant generation and they have a lot to offer. So I'll be happy to share with you what I see and what I think can help you save a lot of money, not developing product that really will not fit this generation. So thank you.
Cool. Thank you so much, Doran, for the detailed introduction. And we have another speaker, Mr. Prakash. I think Thank you so much for joining Prakash in this webinar. Prakash is having 15 years of, more than 15 years of experience in information technology. He's a VP of a company called Veltris. His expertise predominantly into banking, capital markets, and wealth management. So one speaker is from the credit union side, and another speaker is from the technology side. Thank you so much, Prakash, for joining the webinar, and I request you to give a quick background about yourself.
Yeah, I mean, obviously, my background is very different from Doran. And before I start, thanks a lot for having me at this webinar. Uh, it's my pleasure to join, and hopefully, I can add some value to this conversation, and that participants in this webinar can take something uh, back to their jobs and understanding it. I actually second what Doran is saying, that I've also got two grown-up boys, young adults, sorry, and they have both are working right now, and I have is a similar perspective. I think we should not be condescending to this generation, and I think all these stereotypes are, if you remember our history, were used against when we were young. So I think it is just a way that every generation goes through this process. In terms of my background, obviously, I have got some experience. I've had worn many hats, including being serving in the army back in India. So I have is a different perspective from somebody who's typically been in technology industry. So I bring in an outside in perspective to how we address what is the key concerns and business issues for our customers. So I'm focused really on the business side, and technology is just a mean to deliver the business objectives.
Perfect, perfect. Thank you so much, Prakash. So we'll quickly get into the webinar. So before that, I've just prepared few interesting facts about Gen Z guys. I think it looks interesting for you also as a participant, right? So uh, just to quickly do the math, right? The average age of the credit union of a member in the credit union is 53, and every credit union wants to make it at least the average age should be like 35 to 40. That is their intention, and for which they need to onboard a lot of Gen Z customers, right? And the second point is we have two interesting data points, right? So one is in 2023 more than 50% of the all the new accounts that has been originated only via fintech banks. In the second, and another interesting point is the member growth in credit union is actually declining. So what is these two data is giving the message, and that is why we are conducting this webinar, right? So what the credit union has to do to onboard to acquire these Gen Z customers, right? That is the agenda for this context, which actually explains in the next 1 hour. And the another interesting point is the Gen Z attention span is less than 10 seconds, right? Every credit union it has their website, and they have a mobile app. And the moment when they click apply loan or an apply online for the digital account opening, and if the form is very large enough, they immediately do a churn off. So their average span time seconds is just less than 10 seconds, right? We need to do it as quick as possible. And they dislike phone calls, right? They welcome a lot of notifications, they welcome chats, but they don't like phone calls, right? And another interesting thing is they want everything instantly, be it instant coffee, instant delivery, everything they want it instant. So how banks or how credit unions can adhere these sort of customers, right? So that is where we want to discuss this today. And on the logistics part, so you have a chat options. Participants who is part of this webinar, there is a separate Q&A option. Whatever questions that you have, you don't need to have to wait it, and you just post all your queries here. So we are conducting these sort of webinars every month. Last month we conducted a webinar called AI in Credit Decisioning. We have huge response on that. I think one of the members was saying that he has keep asked. He is able to get the answers from the speakers instantly. That is one of the feedback that they have given. So what I'm trying to say here is if you have any queries, feel free to post it, and then Doran or Prakash can answer you. So we have a Q&A session separately, and if we are getting more questions, we can also, as and when we get those questions also. So without any further delay, we just get into the webinar. So I have list of questions where we've collected from LinkedIn. Then we have curated these questions, and then we have taken top 15 questions that I'm going to ask Prakash and Doran. Okay. So Doran, over to you. See, what are the top two, three friction points, right, from a credit unions to that they need to eliminate so that they can onboard a lot of Gen Z customers? What do you think are the friction points, Doran?
So thank you. So the few of them, mm, I think that one, as you mentioned, everyone is going to mobile. So if you have a slow or complicated onboarding, I think it's an obstacle. It's a friction point. Mm, as you say, it takes pretty few minutes. If they don't like it, they just abort. They don't continue with the process. Mm, I think one observation that I see a lot of credit union and a bank, when they compare, they look at their mobile banking, online banking, when they look at the young adults, they compare their mobile banking to other banks or credit union. But what happened when you talk with young adults, they really don't. You shouldn't compare with other banks, because young adults don't search for other banks. If they have a credit union key point, they don't go to Bank of America to see the onboarding, or they go to Wells Fargo or to other credit union. What they do is they compare it to their own application that they use, if it's a YouTube, if it's a TikTok, Instagram. So the comparison is what they use, and they compare the credit union application to it. It's about less friction on complicated onboarding, unclear and overload of information. If you give them too much information and you don't explain it in a very simple language, they will not continue. They don't need a finance degree to understand what you tell them. So I think it has to be very simple, to the point. And sometimes the digital experience that we provide them as credit union or banks feel very behind times for them. They don't feel that we are in the same pace and other application that they use. So I think it's about complicated onboarding, simplify the information, not much overload of information, and making sure that it's met what they're looking for when they use other application that they actually use on a daily basis.
Okay, interesting. So uh, I think well said, Doran. So these are all the friction points, right? So Prakash, over to you. Like from the technology standpoint, what are the things that a credit union to enable some digital experience to the Gen Z customers? What do you think of that?
So when it comes to digital experience, right? I think what Doran said is that we have to simplify how they interact. So the way to think about onboarding is like, are you mimicking the experience that you get in a store? So you can walk into a store, in a high-end store versus, you know, uh, a store where you can get everything, right? A Walmart versus a Nordstrom, right? You have to figure out. So there is an expectation. Not only, I don't think so this is just Gen Z or anybody else, right? I think even me as an older person want a frictionless. I don't enjoy having to go through that process, right? In terms of our the attention span, it is not Gen Z who's got 10 seconds, it's actually 8 seconds, it's all of us. So literally you have to make a decision that you're going to look at an email within 8 seconds, right? So so the question is that how do we do that? I think some of the reasons for those kind of clunky design is that it tries to replicate in-person experience at a bank, where you have to go through a lot of procedures. Because it's a regulated industry, there is a lot of things that you're supposed to disclose. So the question is that, can you do all that disclosure without having to make them wait 5-7 minutes for them to do the onboard? So one of the ways, a design element, is that you break up the onboarding process into bite-sized pieces, which is very simple, that it provides them value and gives them a quick reason as to why it is important for them to know that, right? Make it educational, as well as uh, you know uh, that the onboarding process goes fast. So it has to be fast and educational so that they see the value. I don't think so any customer wants to rush into anything. The point is that if they see this as repetitive, is that you cannot do a simple thing like pasting from one field to another, uh, that things that can be simplified, if you're not doing that, if you're making them jump through hoops, that is when they get frustrated. But if you make it clean, make it clear to them why it is needed, I think they will participate, even if it is a little longer, right? So it is not about just that it is speed, but it is what is the rationale for that. Treat them as grown-ups who have got agency, rather than somebody who is saying that, okay, you just follow all the instructions that we're giving you.
Okay. One more interesting analogy. What I heard is what I saw in the experience with what I had with the other credit unions that I met. See, the members are keep adding. Say, for example, if they go and apply for an online form, so the form is asking a lot of fields, right? And then as soon as the Gen Z customer clicks submit, then the the loan officer from the credit union then calls them that, hey, whether this is right or not. They, after that, they evaluate, right? That is a manual process that is being involved. So what the Gen Z is expecting is, as and when he enters the SSN, they want the Gen Z has to, we need to validate that as soon as he enters the driving license, the system has to evaluate that. Now, so as and when he enters the information, the system should evaluate now and then give the immediate results to the Gen Z guys, right? So that is one of the analogy that people are expecting. And we move on to the next point. So this is the one of closest to my heart. So Gen Z doesn't prefer to get into the branch, right? But assume that they want to get into the branch. What kind of experience that they need when they get into the branch? Actually, they don't want to get into the branch, but even then, if you want to get inside the branch, Doran, to you, what kind of experience that we can give to the Gen Z so that they feel really inspired?
Okay, so well, my kids don't like to go to the branch, and I work for credit union, and they will not go to the branch. But I have to compare it to two scenario. I look at it one as telehealth, where if you're sick and you can go to the doctor, and then you don't have to go to the doctor office, but you see the doctor uh, to Zoom or to any this kind of method channel that can prescribe you medicine and so forth. But what happens when it's a little bit more serious than just a regular cold? You want to make sure that you have the personal touch. You have to make sure that someone actually feeling like someone taking care of you, not on a virtual channel. So I think that there's definitely this space where people needs to come and feel trusted. And another comparison is people say, well, the libraries are the place of the past where we have digital we have the digital channel now where you can download books and so forth. So I went to the library, and I have to tell you that you cannot get one conference space on the weekend. And if you look at it, it's booked and all young adults. So I talked with the librarian. I said, "What it is?" She said, "Well, this is the place where they feel very comfortable. It's a different vibe to it. They don't come to check out books. They come to socialize. They feel that it's a place they can trust to go to. The experience, the vibe is different, and so they have different experience. They have different need. So when they go to the library, even though you think library is not relevant anymore, they go there a lot because they use the space in a different way. They repurpose the library not to take a book out, but actually to meet and socialize. So when you talk about what the branches needs to be do or need to help them, is really, I will say, change how we do business. It's not transactional anymore. It's really consultative. They need to come there to feel I can trust. If I have a problem, even if there's a branch, I don't like to go there. But if there's a real problem, I can go to some place and get the right answer, and a person can help me to go to the obstacle where it'd be very hard to do it over a virtual channel. So I think there's definitely space for space for the branches.
Okay.
A number of reasons, but this is for the reason for the for the young adult.
All right, all right. So Doran touched a very important point, Prakash, right? So the consultative approach, right? So how can we consult a Gen Z guy through personalization, right? So how technology can help these guys to do a personalization? Can you throw light on that, Prakash?
So I think I know omni-channel is used a lot to kind of as a way to seamlessly hand over one channel of interaction to other, right? So for example, if you've started the onboarding or any interaction, say on the mobile app, and you want to go to the branch, it should not take a lot of time for them to identify you and quickly figure out what is the problem that you are trying to solve. So I think how do you remove that friction should be what credit unions could do that, right? So any type of way to say, okay, this was the communication that was handed by the chat. Now it did not resolve. You don't have to go back and explain that why I'm here, right? Somebody says, okay, I am so and so, and you should be able to just pick up, okay, this is the last touch point here that you had with us. What can we do next for you to solve your problem? So that basically is my understanding, that you should not have is conversations that get locked up in one channel, that you should be able to pick and go from one channel to another. I'll give a quick example. It happened to me yesterday with Air France, right? My wife is leaving from India, and she had, her booking was, to India, it was with through Air France, but returning this thing was through some other thing. There were a lot of things that Air France did not have in terms of information, but they kept on sending me emails to say that, look, you are missing this. And by the end of it, we were able to do a complete digital check-in without having to go to the airport and stand in front of a agent to do that, right? They put in thought to say that this is the best way to do it. I did not know that was it a human being on the other side that was looking at my documents that I was sending, or was it just an AI system that was automatically going through and saying that, okay, this step has been validated. So the question is that if banks, credit unions, they really should focus not just on features, but how their customers experience everything, because this is not just about features, this is about customer acquisition, customer retention, and your ability to say, you know what, we will move along with the customer as they move through life. So that would be the way to do it, and that should be the guiding design principle, is that wherever they go, you should know exactly where the customer is in their journey, and you should be able to pick up the conversation without them having to go and explain to you what happened before that.
Okay. I mean, just to add one more, I mean, few more points to that, to the audience is like, uh, expectation is all about building a credit profile, or building a profile for that particular customer. The profile could be of based on the bureau data, based on their existing core banking data, and then with that information, what kind of personalization we can give to that particular customer. That are we doing that, right? Are we doing it in such a way that, like the Air France mail, or that they keep sending emails and messages, but it's of not relevant, it is of no use then, right? So how can we send the personalization to that particular customer so that they get the perfect offers for that particular Gen Z guy, right? So that is what. And switching gears, the another important pillar that we want to touch it is on the transparency, right? So assume that the Gen Z comes to the bank and then he applies for a loan. I think the average time taken for a personal loan is more than 5 days from a credit union. That is what I'm getting. The report says that, but that doesn't seems like the real time transparency that we are giving to the customer. So, Doran, to you is the question to you is, what kind of transparency that Gen Z is expecting from a credit union? If you can elaborate, if you can touch that, that will be of great help.
Oh, as I mentioned before, I think transparency is not just about sharing information, it's really about explaining it. So when you
Mm,
talk about transparency, I mean, I think transparency has a lot to do with trust. First is a clear language about fees, about requirement, and no jargon in it, because again, they don't like the jargon, they don't understand it. So I think they have to keep it fair and understand there's regulations and the things that you need to follow. But the front process has to be very, very simple. Expectation, upfront expectation. You need to make sure that, especially when it's around credit or loan approval, you have to set up the expectation, understand what is the process and what you have to go through. And context for decision. Even if someone declined for a loan, I think it's not just about they can take you can tell them that you did decline, and they will take, okay, they will say it's as long you can tell them no, but as long as you follow up and saying, here is how I turn it into a yes, and what is the process is. So I think this is about transparency. It's really help them to understand how do you go from the no to the yes, and what they need to do to get there. So I think it's very important to be, they can build the trust and understand that to sharing the information that you give them is good information that will help them to go from the no to the yes.
Okay, okay. So the same question goes to Prakash, to you also, right? So how technology is helping them the transparent decisions to the customers, right? How it helps them to give a real time update to them.
I mean, if you think about, right, in the present day and age, right, through your profile, it should not be that difficult from a technology perspective. This is not nothing to do with AI or anything like that. It is just a question of just organizing your backend systems in such a manner that they speak to each other, that you have the ability to pull data from disparate systems, be it third-party system, be it your internal system, be it your anything that is required for you to pull that information. You have it. The question is that, have you prepared your systems in such a manner that it allows you to be transparent? Now, most of the time, this thing is not possible because you have not enabled the backend systems to work seamlessly with each other to drive this functionality. So if you have, for example, like an open banking kind of an architecture where you say, you know what, it is very easy for you to provide information from one system to another, right? Which fintechs do all the time, right? It is amazing that they take the information that banks have and actually use it with it's not very advanced technology. They're not using APIs, they're using screen scraping technology. It is so 10 years old. So the question is that why aren't banks putting that? Because ultimately, if you don't have is a clear business objective that drives this thing. All these just are features to say that how I want to drive our business. If your business is to say, you know what, I need to change the profile of my customers from an average age of 53 to 35, that's a business objective. Then you go about figuring out is that how do you get there? So you have to be very clear. And maybe there are certain banks and credit unions that say, you know what, we don't want to because we are a smaller bank, our charter is different. It's okay for them to not try and rebuild their systems. But if you are focused on that, you really need to get the backend systems, talk to each other, be clear on the architecture, spend some resources on improving your TCO, like cost of ownership on infrastructure. How do you use that to say fund your innovation, right? Innovation has to be driven bottom rather than top down. So this is some of the how you want to get there, but transparency, user experience, everything is driven by the fact that are your backend systems ready for that?
All right. Okay. Okay. Thanks, Prakash. Thanks for that. And now we have hit almost some 30 minutes of the time. So we have just 2 minutes of we have a poll here. Uh, I think our organizing team is going to conduct a poll for just 2 minutes. So we are actually providing a free consulting service for the credit unions. I think we have almost some 20 credit unions that is part of that. So we are giving how a credit union can engage with Gen Z. We have a few interesting consulting that we are planning to give it for the credit unions who are part of that. So I request you to fill this poll for just 2 minutes. So then we'll quickly, again, we can buzz again Doran and Prakash to get the answers done. So would you like to book a free consultation to explore Gen Z engagement strategies for a credit union? So it could be an yes or maybe you are not right now. So you can just fill it out. We'll just give 2 minutes of your time, and then we'll come back to the webinar again. So we have also got some 6 questions in the Q&A option. I think Prakash or Doran, you can just take it out. Meanwhile, the poll is happening. I'll just read it as soon as this poll is done. We'll give some 1 more minute. So basically, this poll is to get the experts from the credit union space, give consulting, it's a free consulting to how you can onboard agency customers, right? So that is what we are expecting. I think after this webinar is done, by next week, we can schedule a one-on-one call to the respective credit union and we can have a discussion on that. So if we are done, I think we can move on. Okay. All right. So I'll just take a few interesting questions that is coming in the panel, coming to the panel. So the one more question is, how are you balancing the need to modernize, right? So that prefers traditional channels, isn't it? So the balancing the need to modernize for Gen Z while still serving an aging member base that prefers traditional channels. So Doran, you want to take it up that question?
So I couldn't hear it. I'm sorry about it.
No.
Can you repeat it?
Yeah, the question is, how are you balancing the need to modernize for Gen Z while still serving an aging member base that prefers traditional channels?
I think it's a balance. I think it's I mean you serve all your members. I think your members should get the same experience.
Mm,
Regardless if you're a young adult, older adult. I mean, it shouldn't be like because a young adult you get a faster experience than you get an older member coming in. I think experience should be an experience. It's you go to Nordstrom as for Casa, you go to Nordstrom, you get the same experience. Maybe people prefer you see you, maybe they give you more money and so forth, and they kind of treat you a little bit. But the experience should be really the same experience. You just have different needs. And I think what happened is you have to differentiate, and the people that you work with either in a branch or call center or any other channel need to understand that the different need and how can you help the different generations to meet their need. But experience should be a great experience regardless where you're coming from, where you're going. It to be a very unified great experience for all your members.
got it, got it. And Prakash, over to you. Like, what are the top technology capabilities that you believe? Say, for example, now there is an audience of 20 credit unions who are listening to this podcast, right? So what do you tell to them that what are the top capabilities that you believe every credit union must prioritize in the next 18 months on a high level? You
I
can
think,
just touch up.
yeah, I think if I were to break it down, right, if I were to just go stack, right, starting from infrastructure, right? So if you start from infrastructure, obviously, try to be as cloud native as possible because this allows you to, add capabilities from third parties, right? That is one. So from moving from there, from cloud native, you say is that if you have legacy applications, try to modernize it. It doesn't mean that you move from mainframe to somebody else, but even within that, how can you reduce the cost of operations for those stack? And then what you have to really invest in is to make sure that you have is the ability for different systems to talk to each other. That is very important because without that you will not have the ability to actually perform complex operations that both required from, say, even if you do a traditional implementation using business logic or business rules, or when you use AI, right? And then is how do you have is a unified data view. That is very important because if you want to introduce AI has to be very clear. AI is a shotgun approach at times because it can go and hit all the data points that you give access to and try to create some information out of it, which you want to be very careful. So how do you do the governance? So not only that you should have technology capability, you should have a lot of process and governance capability, especially because it's banking, so that you are not in a situation where you end up enabling an AI agent to go access data which it should not have, and that you are sharing information that people are not supposed to receive. So there is absolutely that. I think it should be a bottoms up strategy. And then obviously everything else in terms of full stack, your ability for you to quickly execute projects, all those things are as important, like the process part on if you're very agile, are you a product centric or a project centric? So there's some change management. This is also involved. So I would say that it has to be a thorough bottoms up look at which aligns with your top down business objectives.
Okay, so one more thing, I think I've recently attended a CU Reach event. I think it happened in Palm Desert a couple of weeks back. That is where I met Doran. And there, I think one of the interesting technology roadmap for the next 12 to 18 months they are talking about is the main thing is an onboarding, right? Be it a loan or digital account or be it insurance or whatever, right? So whatever product that you want to give to the customers, please make it available online. But when I say online, right, the most crucial factor is don't just collect the forms, right? I think people are all really tired of filling all these forms, like long forms, right? They become tired. So make it more crisp and get the things done as quick as possible, right? That is what the expectation is all about. That is the first thing that I think after talking to almost top credit unions in California, we came to know that make it available online so that they can quickly get to know about the product or services that a credit union is offering to. So that is I think my suggestion is that. So we'll quickly back to the questions what I have. So Doran, the next is the most crucial thing is the business development, right? That is a growth, right? So where these guys are there, how can I onboard these customers, right? So if you can tell what are the ways that a credit unions can acquire these customers at a growth point of view, so that they can take this as a takeaway, so that they can also start approaching them and then acquire their customers.
No, I want to go back to your previous point and just give you an example. When we talk about technology and you brought AI into the picture,
right?
I recently was I was giving a talk in front of about 100 young adults, and then I asked questions. And when we think that young adults really don't understand, and we think that we need to teach them budget, what are loans and so forth, some of the questions that come up were, so I'm building my own financial institution of a AI agent that I'm like to develop to build my own financial institution where I will have a checking account from one institution, a saving account from another institution, and a loan platform from other institution. So if I do this, the question was, what is the workflow that you will recommend for me to create to do it? Just to give you the level of sophistication that when we think about simplicity, I mean, a lot of the young adults are, what level are they? They much higher level. I think what it is, they understand technology better than a lot of us understand. They're already much ahead of many credit unions. So really when you talk about entry level, I think you talk about really how you can help them. I can give you an example. We built a product years ago called Credit Starter to help them start saving, try to make it very, very simple for them and very friendly, and something that will help them their needs. So to start really to get them into the credit union is about giving them the access to like business, give them the access to capital. It's a small amount of money so they can start managing it and build educational module within those programs, but also offer milestones. And milestones, I'll give you an example, a very simple example. If you took $500 and you pay it back, you did your credit well, you pay your loan or your credit within last year, you increase it by $300, $400. So
Mm,
you increase their credit limit, or you give them better rates. So it's about really start small, build education into it, and offer milestones so they can actually feel that they get something out of it, and the whole process help you to get more of them, because they understand a lot of the technology, but just they need the capital, they need access to the capital. The other thing very interesting about young adults, that over 58% of them, when I deal with them, they have already their own business. They're running the part of the gig economy. They're running their own business. And many times
right.
they ask me, how do I find my small business? They have either a Amazon store, or they did some selling AI prompts, or whatever they do. They try to get money because they don't feel comfortable that they will get internship or job, so they build their own businesses. And you don't think as a young adult that you're going to fund their business, but many of them are looking for money to start the small business. So how
Mm,
do you approach it with the young adults? So I think
mm.
this is one way to bring them in.
Okay, interesting point. Uh, so one is on the business development growth, right? So question to you, Prakash, like, uh, how are we going to service them, right? Through, I think that is another buzzword, AI agents and all, right? AI agents and this AI is, I mean, in the last event, I think, I mean, every stall were mentioning about AIs and all, right? So, one is on onboarding them by like Doran said, that acquiring customers through different channels. That is number one. And then how are we going to service them? Is there any AI adoption is there to service them, right? What is your view on that, Prakash?
I think my view is that AI has become a buzzword, and I think it should not be treated as that. I think AI has to be something. It's a tool or a technology as far as I'm concerned, right? It is not one solution that fits everything, right? So that is the reason that you have to be very cognizant of how you want to use AI, because it's an outside organism that you're introducing within your system, right? So you have to be extremely careful, especially in this industry where you don't want to have, an agent that does harm. So the question is that how do you use it? This has to be driven by some level of analysis that you do to say is that where we are in the customer journey, where are the friction, where are the weaknesses that we have, and if it can be addressed with a small fix systematically, programmatically that you have right now, there's no need to introduce an outside agent. Because if, say, for example, if you want to give reporting capabilities to your users, and if canned reports can do it or a dashboard can do it, leave it at that. There is no need for you to say that I will add some more capabilities for them to get ad hoc reports, right? But if you want to say that I want to use this thing to accelerate, say, credit decisioning or something like that, that will allow change the thing, then you say, you know what, this is where my existing processes takes 3 to 5 days. I can accelerate this thing because this will delight my customer. So I think that is the way you should do that. It has to do with bottoms up analysis where you say, okay, I am not able to do this outcome because of this thing, and that do I fix it with normal way, or do I use AI for it? I think that's the way, in my opinion, we should go about.
Okay, okay. And one more interesting feedback what I've got it from one of the credit union was, so they had, I mean, they have built a agent for which, say for example, if the customer has done the onboarding for a loan and then suddenly he doesn't know what is that field is all about, right? And then he was actually looking for what is this all about, what is this field, I don't know what to enter it. So he, that is a quick churn off, right? He goes out of the online form, and then he moves out. So what they have built it is, they have introduced an agentic bot, which as soon as the customer drops off, it immediately sends an email about, hey, we are looking for this so and so this field, and this field is all about this one. This is what we are expecting. Can you please resume your application back, right? This is a small agent that they have built on their own, and then they have deployed it. I think the churn, the servicing the customers have drastically increased. There is no manual intervention here. There is no need of a loan officer that keep calling them, hey, you've missed this, that, and all. Why don't you come back and resume this application? This can be completely automated, and then the operational cost has been drastically reduced for one of the credit unions. I think we have done the consulting for them, but I think this is one of the analogy that is coming to my mind on top of that. Okay, so moving on to the next point. So Doran, again on the business development, right? What kind of partnership that a credit union has to do so that they can acquire more sort of customers, these Gen Z sort of customers? What is your take on that?
I'm going to actually is what are the low cost budget strategies that credit union can go, because we are strapped for resources, and I think it's great to maximize resources to acquire members. One thing that I can definitely give advice is that will save you a lot of money in marketing. That I see a lot of many credit union financial institutions that put either in their social media or put advertising and say, we understand Gen Z and we're starting using this program or this program. Big mistake. They don't like it. They don't like it. It's like saying, um, for me, it's my son will say, it's like I'm telling him where he's going. If he's going to a club or it's going someplace, I tell him, I know where you're going. I'm going to be there. And so they will not go there because they're coming there. So you still have to go to the club and maybe supervise them, but you don't announce it. And I think what happened, you see a lot of it. And I think it's very expensive marketing. So it's something that you shouldn't do. Uh,
Okay.
Being present at schools, I think partner with schools definitely will help you a lot. Participate in community events and also work with nonprofit organizations. I think this is where you really meet those young adults. And I think the biggest thing for them is you need to really look at what they're looking for. The biggest concern for them is not how am I going to manage my money. The big concern for them is how do I get a job? How do I get an internship and a job? If they don't have this, they don't have money. So I think you need to help them find ways to help them how to solve this problem first, and then come and say, want to help you to solve this problem. Mentoring by providing some services will help them to do it. Then you have the right to help them to help them really come with ways to help them manage their money. So I would say a lot of schools, colleges, partnerships with them really can help you, and community events really can help you engage young adults.
Okay.
I
Got
want
it.
to add one quick point to this, right? Partnership, in my opinion, is also like a lot of credit unions were formed as an employer-based banking that was provided, right? So, like we've been in this country for 25 years, we've been with the credit union for all that time, right? So, so one thing is that having those stronger relationship with employers that can offer. I'll give you an example, right? I tried to, grandfather my kids into credit union, but they have moved out from credit union because their job where they had their end-to-end financial needs taken care of, for them that credit union does not hold any attraction. So having that is very important, that you give them the features and the benefits that, say for example, my son is getting through his employer. So I think that is another food for thought.
Okay. Got it. I think we have came to the end of the session. I think we will take some 3 4 questions from the audience. Uh, uh, I mean, Prakash, to you, what KPIs basically a credit union has to measure, right? So now we all agree that Gen Z is expecting a lot of digital first experiences and all, like Doran and you were saying about it, right? So what kind of KPIs that they need to measure it uh, uh, on, I mean, to improve the member outcomes. Do you have any idea on that, Prakash?
So one thing, there was this report that I read that uh, banking and financial services industry performs the worst when it comes to actually the incorrect focus that we have as an industry, right? Uh, the focus is a lot on product adoption. So it's, for example, is that how many downloads you have for your mobile app, or what is the, how much usage, rather than the KPIs which should be focused is that what is the rate of customer acquisition, what is the customer acquisition cost, and what is your customer lifetime value. Those, in my opinion, are as important as this. So banks should not think of themselves different from any other business in the world. That these should be your drivers. If that So focusing on is what is my customer acquisition cost, what is my conversion on customer acquisition, what is my retention, and what is my lifetime value, and what is my churn as far as my customers are concerned.
Okay, okay. The very important KPIs. And the question from Amanda that so Doran, to you. So these Gen Z customers are always have thin file, right? Thin credit bureau file, isn't it? So what kind of credit decisioning changes do you believe that are necessary to respond to these sort of thin file customers?
Let me rephrase it. You said that they already have credit file.
No,
Can
they
you?
don't have they don't have a thick file, thick credit file, right? So
Right.
Gen Z just introducing to got introduced to the banking world, right? So they have a very thin file, credit file. So in that case, what kind of changes that you wanted to give to the policy, the credit decision changes that you need to do, so that they can support these thin file Gen Z customers?
So I tell you what we did. I mean, I went to an event many years ago. I went to an event at San Jose State University. A young adult asked me, "I don't have a credit. I don't have any. I don't have credit. I don't have yeah, at school. I don't have a credit. I don't have a cosigner. No one wants to give me credit. No one wants to start me." So he asked me, "What can you do?" And I said, "I can't do anything for you right now, but I could tell you in 6 months I'll come back and I'll do something for you." So we developed years ago a credit starter program where actually we gave young adults $500 loan at 0% and no cosigner. They had to have employment. And we took this money and opened a checking account, saving account, put in a saving account, and used this $500 to secure against the loan. So they didn't get the $500 until they paid within 24 months. So they paid every month like $21. They're able to build the credit. Now you build your credit, no cosigner, you pay I mean, it's $21 a month, but you build your credit score. So what happened now, they trust you because you did something for them. And the end of 2 years, not just that you have a credit file, but you also have 500 in savings. So it's about really what you have to develop the right product that will help them achieve what they're looking for and do it again, not risk your institution, but also make sure that you give them something that they can actually get, and not to wait to someone else to co-sign for them or to find a different ways to go to loans other places where they charge a very high rate or so forth. So really put something that really meets their needs.
Okay, okay. I think very interesting point. I think credit builder is one of the important strategy. I think credit unions can immediately step in. I think you are saying that you build a profile over a period of time and then you can just start giving the proper credit, right? Doran,
Yeah.
I think yeah. Interesting. And one more thing is on the community outreach, right? How, I mean, this question to you, Doran. Uh, how, I mean, many credit unions wants to differentiate themselves, right? There are so many, I think more than 5,000 odd credit unions are there in the US. So can you tell me what kind of differentiation strategy that community can step in, so that a community outreach can also be a true competitive advantage for that?
I'm a firm believer that community outreach is your competitive advantage against banks. And will give you a very quick example. I went to an event and about 20, I mentor a club of students, and about 20 students, and I asked them, I did an exercise with them. I think it will give really bring to light the example how community is important. And I asked them to ask how many people are members of credit union, and no one raised their hands. And I said, what I'd like you to do, I'd like you to look at any nonprofit organization within our area, Bay Area, and tell me, and then ask him, how many of you have account with Chime and PayPal and all this? And a lot of them raise their hand. It's what they do, and I understand. So I said, what I would like you to do is I'd like you to go to any nonprofit organization within the Bay Area and look at the list of donors. And I asked them also, do you think that it's important for a company to be involved within the community? And they very much believe in involvement of community, responsibility of the companies to better the life of people within the communities. So I asked them, I challenged them, and I said, go and look at your nonprofit organization. Tell me any organization that Chime is contribute to. So,
Mm,
so give me a few minutes. They couldn't find one organization, nonprofit organization that Chime gave money to and within your community. Now I said, well,
mm.
I'd like you to go back to this organization and tell me how many credit union donate to this organization. Every organization to look at, there was one or two credit unions. And I said,
Interesting.
so you tell me that you would do business with people that are giving back to the community. So why are you doing business with Chime?
Mm.
So I will tell you that I met with them like 6 months later, at eight students that opened accounts with credit unions,
Wow.
five with
Wow.
five with my credit union and three with other credit unions. Pretty high closing ratio if you think about it. But
Got it.
the point is that when you really they realize what you do within the community, it's become a competitive advantage for you because they
Mm.
believe that you have to give back to the community. And if you don't part of the community, maybe I shouldn't do business with you. So I hope this will if you get my point across that it's a competitive advantage for you to be involved because this is what they believe in.
Very, very interesting point, Doran. Thank you so much for explaining that. I think we have come to the end of the session. Uh, so, last few words, Prakash. What is the key takeaway that you think that the participants should take out from this webinar? Right, just 2 3 sentences you and Doran can tell to the final words to the audience.
I think from my perspective, my one-liner is that technology is a means to an end. So you have to figure out what is that you are heading towards, and technology should aid in that. Technology should not be the one that is dragging the organization in different directions. So I'm a firm believer is that get your business outcomes lined up, business objectives lined up, and then you can figure out how technology gets you there, right? That's my one message if I want to pass on to everyone. That should be the approach.
Perfect, perfect, Prakash. And for you, Doran, what is the key takeaway that you want to give to the audience?
But first of all, thank you for having me, and thank you for Kash for the insight as well.
Thanks.
I think it's for me it's about flipping the narrative and understanding that we're not there to save Gen Z or the young adult. They're here to save us. So we really need to first respect them and listen to what they have to say, not just hear them, but listen what they have to say, and build
Mm,
product and services that really meet their needs and not meet just our needs. And so this is what we need to make profit because profit is a long-term proposition. And if we not survive, if they're not going to come to us credit union as members. So I think we need to actually listen to them, respect them, and understand that they're the next generation that will carry our credit unions for many years to come.
perfect, perfect. That's a brilliant takeaway from both of the panelists here. Thank you all. Thank you so much for joining this webinar. I think every month we are going to conduct this kind of webinar specific for credit unions and what is happening, the AI data and all. Please stay tuned in our LinkedIn page. We are very active on LinkedIn. Daily we are writing very informative articles on the LinkedIn. Also, you can just follow me on LinkedIn. And thank you so much for joining this webinar, and who have registered shown interest in their digital consultant free consultation, and then we'll happy to engage you after this podcast. Okay, thank you all. Thank you so much. It was pleasure talking to you all, Doron and Prakash. Thanks for being here.
Thanks a lot for having me.
Thank you, man.
Thank you.
Thanks a
Bye.
lot.
Thank you.
Yeah, bye.
Thank you. Bye-bye.
Bye. Thanks, everyone.
Thanks, Prakash. Thanks, Doron.
Thanks.